Good morning, good afternoon, good evening, wherever you are. I'm your host, FD for SageFact.tv, and in this video, we bring you one of our favorite segments, which is DYO or risk evaluation, where we do review new projects or existing crypto projects to see if they are worth our time and our funds. That is, if I want to invest in them. So that's what we're going to be doing in this video, and to do that, we do apply our DYO or risk evaluation, where we apply 13 elements to help us assess whether this project that is in front of us or that we're reviewing is actually worth our time and our investment efforts. That's what it's all about. But before I proceed, this is not financial advice. I'm not asking you to do what I'm talking about in this video. This is a guidance for me and the projects that we do feature in this video or on our channel. Some of them we do have positions in them as a channel, or some of them I do invest in them privately, but it's not financial advice. If you do require financial advice, please approach someone who's actually trained to give you financial advice. The information contained in this video is just for educational as well as entertainment purposes, and it's also not targeting UK audiences for obvious reasons. The UK authorities do deem anything crypto related to be extremely risky, and they're trying to protect you just in case you end up losing your funds. That's it, guys. Let's come back to the subject matter. DYO or risk evaluation on Sin Future or Sun Future. I am going to refer to it as Sin Future, but it might very well be pronounced as Sun Future or Sun Futures. So imagine in a space awash with derivative protocols promising leverage, low fees, and yield, Sun Futures takes a claim by blending automated market makers or AMMs and on-chain order book models, permissionless listings, and cross-chain ambitions. It's trying to be the DeFi equivalent of a full-service trading desk, but open, decentralized, and accessible. Whether that vision holds up when traffic surges, audit pressures mount, or markets turn volatile is what we are going to be examining in this video. So what is Sun Futures or Sin Futures, like I intimated at the top of the video? Well, Sun Futures is a decentralized derivatives platform that enables users to trade perpetual futures and dated futures contracts on arbitrary assets. Key attributes include the fact that it is built on Ethereum with a multi-chain and layer 2 expansion. The F token is an ERC20 token on Ethereum and it's bridged to Base. The protocol offers Oyster AMM model plus a fully on-chain order matching engine in its version 3. That means LPs or liquidity providers can provide liquidity in ranges, traders can use limit orders, and the system supports perpetuals with native funding and convergence to spot indices. It has launched a PEP launchpad to allow new assets, for example meme coins, LSTs, and so forth, to be listed for perpetual contracts in a permissionless way. Now let's move on to some of the key features for Sin Futures or Sun Futures, depending on how you are going to be pronouncing this. And the standout features include the Oyster AMM, which is a hybrid model combining concentrated liquidity and on-chain order book for better capital efficiency. This means liquidity providers or LPs can choose where to concentrate liquidity. Traders can benefit from price depth near mid-price. The next feature is its permissionless listing and launchpad aspects. Projects can list assets without centralized gatekeeping for futures or perpetual. This gives agility but also involves some risks. So always look out for risks, guys. Everything in crypto has got some risk attached to it, including the big daddy, which is Bitcoin. There are some risks involved with investing in Bitcoin. Next, you got leverage trading and range orders. Here, users and liquidity providers can use leverage and LPs can supply liquidity in ranges or via limit order style provision. Next is multi-chain and cross-chain network expansion, where it plans to deploy in Ethereum layer 2s such as Arbitrum, Base, and so forth to reduce cost, finality, or friction. And finally, you've got governance via the F token and Sun Future Foundation. The F token is used for governance via the Sun Futures Foundation, which aims to steward protocol direction, grants, and so forth. Moving on to value proposition as part of our review into Sun Futures. Where does the value for users and investor come from? First, you got capital efficiency. The hybrid automated market maker plus order book plus concentrated liquidity mean LPs can earn more or less capital, LPs standing for liquidity providers. Permissionless derivatives, being able to list arbitrary assets including long-tail tokens gives early movers access to alpha. Traders wanting derivatives exposure can use this system rather than centralized exchanges with fewer custody risks. And the foundation and token governance potentially allow decentralized tiering. If this works well, it lends credibility and and long-term sustainability. For investors of the F token, which is the ticker symbol for Sun Futures, value comes from governance rights, fee sharing, possibly rewards or bribes in gauge-like mechanics, and benefits from growth of trading volume and usage. Moving on to use cases as part of our ongoing DYOR risk evaluation on Sun Futures. The first use case is that perpetual futures on non-standard assets, for example, LSTs or meme coins, where centralized markets don't offer those or markups are high. Next, you got LPs wanting optimized yield via range provision or limit style orders. Traders needing leverage or hedging tools in DeFi without centralized exchanges. And next, you got launchpad style projects wanting to bootstrap liquidity and derivatives exposure. So as part of our DYOR risk evaluation, as usual, we are going to be applying our 13 elements in decentralization, security, scaling, interoperability, the project team, age of the project, social media presence via X, as well as via Discord, project use cases, as well as the tokenomics. Those are the numbers now that matter. And to kick us off is decentralization. How decentralized or how much decentralized is Sun Futures? We are going to be doing this through a strengths and weaknesses analysis. The Sun Future protocol is moved toward decentralization. The team has established Sun Future Foundation to steward community governance. The F token gives governance rights, ownership not completely centralized under one group. So those are the strengths, and the weaknesses for Sun Futures or limitations include those coming from early versions, which was V1 and V2, which both had significant control by core contributors. Many allocations logged, vested, but still large portions allocated to backers and advisors, core contributors, foundation treasury. These allocations can pose centralization risk, especially if unlocking schedules bring large sale or governance power. Permissionless listing is good, but order book models and AMMs still involve smart contract admin rights. Potential for centralized key risk is if not all components are fully trustless. Moving on to security, here we are talking of audits and the funds, are they safe? Current data indicates that audits were performed by PeckShield for the version 1, and for version 3 they were performed by QuantStamp. And Sun Future claims lower gas cost per trade, around 200k gas compared to many other derivatives protocol, which may help in terms of congestion. Some risks involved with Sun Future security, audit findings. Even in audit reports, certain vulnerabilities or performance security suggestions are made, typical but relevant. Onboarding new or exotic assets such as meme coins, less liquidity assets, increases risk of oracle failures, manipulation, low liquidity slippage, and potential for liquidation cascades. So that is on security. As far as interoperability is concerned, Sun Future is built to operate across networks. The team plan or have already deployed or intend to deploy on layer 2s, examples including the deployment on layer 2s such as Arbitrum and Base. Bridges of the F token to Base via Super Bridge are also available, and using common EVM tooling, for example, help to ease cross-chain deployments. Moving on to scaling or the potential for it, order book plus automated market maker hybrids tend to require higher throughput and efficient matching engines. Sun Futures claim V3 model is built to handle that. Multi-chain deployment helps scale by distributing load, reducing gas fees per chain. So I'm hoping by launching on Binance, on Ethereum, maybe someday on Solana, that will increase the scaling potential for Sun Futures. But scaling derivatives is inherently risky. Liquidity fragmentation, slippage, funding rates, volatility, all those things need to be considered when you are looking at Sun Futures. Let's move on to the project team. There are approximately 11 to 50 team members according to LinkedIn. So for the purposes of this video, we are going to be going through the middle, which is approximately 25. Social media presence via X, formerly Twitter, we are looking at just over 365,800 Twitter followers or X followers, and via Discord, just over 209,000 Discord members. Let's move on to tokenomics and stakeholder allocation. Maximum total supply, I think it's around 10 billion F tokens. Circulating supply is about 2.5 billion as of recent data. The token allocation is as follows. Community was allocated 28.5%, backers and the advisors about 23.5%, foundation treasury approximately 25%, core contributors 15%, protocol development 5%, liquidity about 3%, which was unlocked at token generation event or TGE. And when it comes to unlock investing, many allocations have locks and vesting schedules. Backers, advisors, core contributors, foundation, treasuries, mostly linear unlock over several years after some cliffs. Inside allocation, according to our own assessment, comes up to approximately 63.5%, which is going to have an impact when it comes to the scoring of this element on inside the token allocation. Let's look at some of the pros and cons or risks involved in investing in Sun Future or Sun Future. Let's start with the advantages first. It's Its innovative hybrid automated market maker plus order book model improves price discovery and capital efficiency. It is permissionless and it has broad listing potential, which gives it early mover advantage. It has strong backers in Pantera, Polychain, and many others, which adds credibility. It has made good progress on decentralization and governance via foundation and token distribution, but on the price front, it's still struggling because I think it's still revolving or is still moving around the 1 cent mark. You've got the others like MYX Finance and Hyperliquid. Those are big movers. So Sign Futures, if it's got any chance, maybe they need to employ a good market maker. What about the disadvantages or potential weaknesses? Well, market cap and liquidity are still fairly small. You're talking of between 18 to 25 million relative to the ambitions. Liquidity risk remains. All-time high was around 1 cent versus current price of approximately 0.8 of a cent, meaning large drawdown and possibly weak market trust. Exposure to Oracle risks, exotic asset risks, leverage risks, liquidations, and don't forget competition, which is also intense. I've just given you examples of the likes of Hyperliquid and MYX Finance, who are both doing quite well. So many projects are also building perpetual DEXs, hybrids, and so forth. So it's not just Sin Finance on its own or Sign Finance. Is it authentic or is it just a Ponzi? Where does it stand on our authenticity versus Ponzi scale? On the continuum between authentic and Ponzi, I would place Sign Future closer to authentic but early stage, which means there is still a small element of a Ponzi there. It shows technical depth, investor backing, decent tokenomics with vesting, audits, and real future roadmap. Not perfect, but far from an absolute Ponzi. Sign Future is building towards the dream of open derivatives as a usable, safe as possible, and as transparent as DeFi can offer. It's trying to replace centralized futures houses with hybrid automated market makers, on-chain order books, and cross-chain bridge. If all goes well, it could be one of the pillars of the next DeFi derivatives wave. But there is always a but, isn't it? And there is always that. It still has to prove that traders will consistently prefer its order book or automated market maker mix over established incumbents. That liquidity will scale without compromising decentralization, and that unlock schedules won't create exorbitant or extremely high sell pressures. If Sign Futures succeeds, it may well be the powerhouse platform that raises the bar for perpetual. If not, it could be a cautionary tale. Big promises, complex tech, but failing to outrun risk. So that's it on Sign Futures. Now let's move on to the exciting part where we are going to be scoring the 13 elements we just reviewed. And a quick rundown of those 13 elements once more. So you got decentralization, security, scaling, interoperability, the project team, social media presence via X, formerly Twitter, as well as via Discord, edge of the project use cases, tokens issued at project launch, total tokens in circulation at the time of recording, maximum tokens available, as well as insider token allocation. Those are the 13 elements, and we will be scoring from 0 to 10, 0 being the worst or poor, 10 being the best or maximum. To kick us off is decentralization. We gave Sign Finance or Sign Futures 5 points out of 10, security 5 points out of 10, scaling 7.5 points, interoperability 7.5 points, project team 7.5 points, social media presence via X, formerly Twitter 7.5 points, and social media presence via Discord 7.5 points. Edge of the project approximately 5 points out of 10, use cases 7.5 points out of 10, tokens issued at project launch 5 points out of 10, tokens in circulation at the time of recording 5 points out of 10, maximum tokens available 2.5 points out of 10, insider token allocation 0. Why? It's sitting at over 60%, way above our threshold of 35% or somewhere thereabouts. Anyway guys, those are the scores we've allocated to Sign Futures. Any thoughts? Let us know in the comment section. The aggregate score for Sign Futures and its F token comes up to 72.5 points out of 130, which gives Sign Futures a decent score, but it still falls within the could go to 0 category, which means Sign Future is still at risk of going to 0, even in its short life or within its short life. Any thoughts, guys? Let us know in the comment section. Do you hold Sign Futures? Let us know in the comment section. I must declare as well, I do hold a small bag, but I am still adding this early phase of the price of the F token having bottomed. I'm still adding to a position. I do hold a small position currently, and I do plan to add, like I said. What are you thinking about Sign Future? Let us know in the comment section, guys. Until the next one, FD for 65.tv. Sign off now. Bye.